G'day everybody, and welcome to another episode here at Tribal Trades, the daily show coming at you from the great state of Florida. One hell of a drug. And I do want to welcome you to the channel wherever you are tuning in from around the world. Thanks for watching. Today is the shakeout before the breakout. And let me tell you, don't say that you weren't warned. Because for many weeks, I've been sharing and talking about the historical data of the January dump, when it could happen, the likelihood, how deep it could go. And of course, we saw a bearish engulfing candle happen yesterday. And of course, we could see some more downside. We're going to look at how down we could go, what levels we need to look for, a bunch of other charts and stuff. But before we do that, of course, smash the like button. This does help get this channel to more people and does help support the channel, of course. And thank you for all the kind words and encouragement that you've left in the comment section. I do take the time to read them. You take the time to write them, and I do appreciate that. Thank you so much. And of course, those who ask questions in the comment section, I do get back to those as soon as I am able to. Of course, if you'd like more direct access to me, to engage with me directly on and more immediate response, then the Discord is the place to be, the Stocks with Josh Discord. How do you find out about that? I'm so glad you asked. Just below in the description, you might need to click on the more button to pop out the description. There are a couple of links there on how you can get started on your Discord journey in the Stocks with Josh Discord. I'm in the crypto channel there daily, engaging with some of the most amazing people on the planet. There's a stocks channel there as well. There's a meme coin channel, aka the party zone. And of course, I have my own Crown Traders channel there as well, that I share education, insights, resources, of course, some of my trade setups, as well as entertainment, because this is not financial advice. I'm not a financial advisor. This is for education and entertainment purposes only. Are you not entertained? And of course, as well, make sure you are following me on X, because I do find people to randomly do giveaways for. So you got to make sure you're following me on X. And of course, yes, here I am, Crypto Coins 365. That's where you'll need to follow me there. Okay, even though post-halving year historically Bitcoin drops earlier in January and between 20 to 30%, there was still 22% of the vote that said there won't be a drop. Okay, and this is why people get trapped in not good positions, because history doesn't always repeat, but it often rhymes. Secondly, a 8% of the vote felt that there would be, so the lowest number felt that there would not be the normal drop in the first part of January, and the winning vote was actually that it would come later in the month. So I thought that was very interesting, and this is exactly why we've dropped as we have normally dropped in this cycle. And don't say that you weren't warned, because I did post this. Let's go back to it here. There you go. I did post this just to give everybody a heads up that the lows for all January were an average on the 12th. Okay, so that's good data to know that usually the January low does come in first within the first 10 days of January. Number one, the January lows post-halving years have been the 1st, the 4th, and the 12th, with an average of the 5th. So again, historical data pointed to more of a low situation in the first half of January, first third of January. Now, the only outlier there was January 2013, which there was a drop of around 20% on the 24th of January. Now, that could have been a possibility, and it might still happen. Maybe we create here, and we'll look at the charts in a moment, a higher low, and then we push in to the end of January before we had that drop and that sell-off. That does remain a possibility. Of course, in 2017, the drop happened on the January the 5th and took a week to find the bottom of that drop before their reversal, even though that wasn't the low of that month. The low of that actually came in, well, actually it did. It came in on the 12th. Okay, so January 2017, we started dropping on the 5th, we finished dropping on the 12th, and we found our bottom on the 12th for that month, okay? That could be something that plays out. Of course, we've dropped on the 7th of January, and so we're still within that 10-day, 12-day time frame there. Then in 2021, there was a drop initially on the 3rd, and then there was a little bit of a rally, And we've kind of seen that. The market kind of dropped into the beginning part of January. Then there was a little bit of a rally up over 100,000. And now we've seen another drop. So 2017 is kind of looks like it's playing out. And 2021 kind of looks like it's playing out as well, where we had a bit of a pump. And then now we're having a dub. And then, of course, January, we had a bit of a pump into January 5th. And then we dropped and didn't bottom out until January the 12th. Now, when the drop happened on January the 8th in 2021, it ended up being around a 30% drop, and it didn't bottom until the 22nd of January there, okay? So the question is, let's look at the charts then and how that historical data is going to line up there, okay? So we're going to jump into the charts here and have a bit of a look. So we do have the bearish engulfing candle on the daily time frame. That is confirmed. Okay, we have lost the 50-day moving average, okay, but we have created a higher high here. So there's the high, maybe before I said higher low, and this might be a higher low here as well. So let's just look at this. We've been in a downtrend creating lower highs and lower lows. Now we have a higher high, which is higher than this high there. So we do not want to lose the December low. That's what we're going to be looking for. The December low is sitting at 91. Well, the December 30th low. It's not the December low. The December 30th low, we don't want to lose the close there, that 91,530. So we do need to hold above this level here. And if we can do that, then we do create, and this dip may not be as severe as maybe was once first thought, okay? So let's look at that scenario first. So that scenario, we come down and we retest around that 92,000 level. We come and hit this double Fibonacci line here. We create a higher low, and we have a higher high, and we have a trend reversal. Now, this could take a number of days or a week to filter out and finally come down to here. And alts could take a real hammering during that time, by the way, even though Bitcoin may only move down a little. We're going to have a look at Bitcoin dominance in a moment. And then we'd want to see this come up and create a higher high, come up and retest this 104K level. And therefore, we now have a higher high. We have a higher high, a higher high, and then another higher high. We've got a low. Now we need a higher low, which we may have found here because we are finding a little bit of support on the 50 EMA on the daily time frame. That's the 50 EMA on the daily time frame. And currently that is holding the line. Now, if we were to lose the 50 EMA on the daily time frame, of course, then this does bring in where we may take out this here, and this was a bit of a fake out. This higher high was a fake out, and then we create a lower low here, and this obviously there could bring us down into these levels here of this high, this 89 to 90,000 level. Come down and look at this, the December low, which I believe was on the 5th of December there, which is down there at about 90,500. So that would be maybe creating a double bottom, which could be quite bullish. Now, the 100 simple day, 100 moving average, simple moving average there, 100 day, this is continuing to move up. So this is currently sitting at 84. So that remains a danger to the downside. And this is why I had identified this 85 to 90K level as a possible area where we could really wick down to. Now, whether we get a close below this 88K level, whether even we get down into the 80s again, is something that is to be determined. Like I said, again, this could be it. This could be the final shakeout before the breakout, but we do have more economic data coming over the next few days, and so that could lead to more market volatility. And of course, if we were to lose the 50 EMA on the daily, break below it, retest it, and reject, that may be a place to think, okay, now we are going to come down and possibly create a lower low here, and this high high was just a fake out before the shakeout, before the breakout. Okay, that's maybe what we start to see happen there with Bitcoin. Let's have a quickly look at Bitcoin dominance here. And of course, we are seeing that break above all the key moving averages. It's just the 100 there that sits alone waiting there to see the last one, but it's above everything else. It's above the 200 EMA on the daily, it's above the 200-day simple moving average, and it's above both the 50 and the 20 EMA on the daily time frame. And it's currently finding support at the 50 EMA on the daily there, and so the 50-day moving average is below as well. So this is something we didn't want to see. We were looking for this to come in, reject here, and then push to the downside. Not only did we see it break through without any kind of resistance, it then had a little bit of resistance at the 50-day moving average before it pushed through. So if we continue to see this push up, and maybe this is what we'll see come up and hit on this, and this is where we broke down from, by the way. So it did retest it and broke through, and then eventually came back, retest, rejection, and broke down. So we are looking at this 100-day moving average. I would not be surprised if we came up to it, which could lead to some more downside for alts, and we'll talk about that in the altcoin show. They're coming up, okay? Now let's look at the liquidation levels, because I did share on the show yesterday that I thought the market makers would go up, grab the liquidity before coming down. And in reality, they just kind of left it. They did come and take some. They did come and take some liquidity. Let's just go back a little bit to this 48. They did come and take some of this liquidity here at this 100, but they left it here. You can see there was this liquidity here that I really expected them to come and get first at 103,000. And they came up and they grabbed the liquidity at 102, which I did say they would do. So they did come up and get that 102,000 liquidity. I thought they'd pop up a little bit higher, but they pretty much did that. And then they come down and started to grab all this liquidity here. You can see just wiping out all this over leveraged longs and coming all the way down to that $94,000 level. Now, if we go down a little bit deeper to the weekly time frame, we can see that there is this, I do believe we are going to come back up to this 103, 104 level. And maybe this is where we come down, create that higher low, and then go and create a higher high up to 104,000. I want to know your thoughts. Is this the end of the dip, or is there more downside coming for Bitcoin? I do think there is some more downside coming for, but was 94K the bottom for this drop? I mean, that's a decent drop, and we'll look at the percentages in a moment. But you do see there is more liquidity to the downside there at 94 and down at 93. And if we really zoom out to the 3-month time frame, which was what we did yesterday, because I was concerned down here, you see at 90,000, there's 263 million. So I would not be surprised if the market makers came down to get that 90,000, created a double bottom, matching the December 5th low. It does mean that it would create a lower low though. So maybe they don't quite come down that far. Maybe they come down that $91,000 level and make sure that they keep that low intact, but maybe they will just come down and get it. Of course, it can get a bit scary. You see all the way down there, 81,000, there's 133 million. I'm just not sure that we go down that deep, okay? I do think this is the most imminent level right here at 90,000. You can see the market makers came down, didn't quite get it, came down here for a flush, and there was still a little bit left behind there. Again, it came down pretty low here at 91, but we still have this liquidity that is there. So let's look at some possible measurings that we have here. If we look at the measuring tool, and if we take this down, we've seen the drop has so far been about 8%. Now, if we were to take it from that level and take a little bit further down into the 11 to 15, even down to the 17% level, down to that 100-day moving average, that's a move of around a 17%. So that wouldn't be really shocking, to be honest, because that's, Bitcoin corrections has tended to be around that 20% level. However, if we take an overall correction, we say, hey, this is just one part of one bigger, larger correction, which is what I'm inclined to at the moment, and we pull it down from this 108,000 level and go down, we do see that sitting at around 21%. Down to around that 84%, 84,000. And this is why I've continued to look at these levels as possible levels that we could come down to. I'm not saying that we will. And I do think part of the January drop was front run in December, and it came a little bit early. I do believe the cycle is a touch accelerated. That would be clearly shown by Bitcoin dominance, what I believe topped out in November, late November, rather than historically in 2020, it topped out in late December, for example. And so, we are seeing, some more downside there. So keep an eye on this level. The key level for me here is right here, which is the 50 EMA on the daily, which is at 94,420. That is held as support so far. If we were to lose that, the next level down there is that 92,800 level. That's that double Fibonacci level. We've come into it, one time here, two times here, 3, 4, 5, 6 times there. We've come into that level. It does make me nervous. The more this level gets tested, the more likely it is to break down. And then, of course, if we do lose this 92,800 level, then the December 30th low, which was at 91,500, that would be the next level here. And of course, if we were to lose that level, then we are creating a lower low. And this would have just been a fake out. This higher high would have been a fake out. But that doesn't mean that doesn't turn out to be the low and create a double bottom scenario. Even coming down, the next level there is down at that 90,000 level back on the December 5th low, which is also lines up with this Fibonacci level here of 90,864. And we could certainly come down, take out those lows, and just wick into this $89,000 level there. That would not be a surprise, specifically if some of the economic data that comes out this week is a little bit bearish. And so far it has been. And so I'm not really expecting that economic data to come out strong. And so I am expecting some more downside there. And it's just whether or not we lose this December 30th low, whether we lose this December 5th low over here, and then come down. And of course, this is going to be moving up all the time. Every day, this is moving up higher and higher. And whether or not we just see a wick down in there, really flush out all of those over-leveraged long positions, really reset the market, really bring a lot of fear in there, and then it plays to the upside. How can we best prepare for this? Of course, well, if you feel that you're over-leveraged or you're overexposed, you may want to set a stop loss that if we were to lose this level here at the 50 EMA on the daily, of course, or you could set stop losses here at the Fibonacci there. Of course, how I'm playing it is I'm really just looking, and I've set up a lot of buy orders down around these lower areas. I'm just going to be patient and wait. I'm just going to hold what I have because I am in house money overall for the bull market. Okay, so I'm not going to panic sell any of the positions that I have, because sometimes you get these wicks down and before you get a chance, you get stopped out of your positions, then you're back up again and you're like, oh my gosh, I was sleeping, or it didn't hit my buy orders lower, and you end up just buying back at the same price or higher as it is. So I'm just holding what I have. I did scoop a bunch of profits off the table on this pump here. And so, I have that dry powder ready to deploy. And so that's going to be my strategy, is I'm not going to panic sell the red candles. I want to buy the fear. I want to buy the red candles. As they say, you should be fearful when others are greedy. And of course, when others were greedy here, when I saw that poll come out, which I shared on X, I was fearful. And I thought there is a lot of overconfidence here, and it's not based on what the historical data had been saying, although I certainly thought there was a chance that there might come the dump later in the month, and maybe it still will. Maybe I'm not ruling out that possibility. Then we might see a higher high, higher low, higher high, and then we push up, and then we have the dump, a real dump later in the month. That's quite possible. I'm not ruling that out, okay? And that is something that we do have to, don't say, oh, I'm selling everything now because we're going down further, we're going down. No, we could create a lower high here and another higher high, and then another lower high here at a higher low, higher low here. And then we could then push up back up to 108, create another higher high, and then come back and create another higher low, and then push up again. So that might have been it. That could have been the shakeout. And then at some point later in the month, we could have a drop, or maybe this was the drop here. As you can see, we have seen a decent drop so far from 108. We did come all the way down there, and that's a decent 15% drop, and maybe that will be it. Maybe that is the January drop and it's done, and this is just now a final shakeout before the breakout. Let me know what you think is going to happen in the comments below, and we'll obviously stay updated in the Discord. I know that's going to be very active there today, and I'm going to be in there sharing some more thoughts as the day unfolds. All right, well, until the next episode, happy trading.